What's going on, guys? Nick Dark here. This is going to be another video for the Forex League Market Lesson Series. And in this video, we're going to be going over Fibonacci. So this is a quick diagram, pretty much just showing you a measurement of a bullish push. So from A to B. So this is a rally here, right? Bullish movement. And this pullback here is highlighting which Fib levels are good and which are okay and which are not so good. So starting off at the top, 23.6% Fib level. This is not the most accurate Fib level. You can see some rejections here, but we usually wait for at least a 38.2. So what we're looking for here is a push from A to B, a pullback, and then some sort of continuation. So we're looking for a bounce off of one of these levels. And what this represents is essentially it's a pullback. It's called a Fibonacci retracement. So we're looking for a retracement to a certain percentage that, is known to, have reversals or to continue a trend. So a pullback, a 23.6% pullback is not that good. It's not true structure. Oftentimes, it's not the true continuation of a trend, whereas 38.2 is. So once we see a 38.2 pullback, this is usually one of our golden levels, as we call it, where we'll likely see a reversal here, and it usually, supports a high probability trade. So I'll jump over to the chart in a second to show you guys, but 38.2 is the zone we want to be aware of, and 61.8. So these green zones are golden zones. These are the best zones you can trade for a retracement. And this is where the highest probability trades will come from, 38.2 and 61.8. Now the 23.6 and the 50% are red because, these are a lot of mixed signals happening around here. You don't exactly get the strongest trends bouncing off these levels. You will, in some scenarios, see the 50%, a reaction off the 50%. But, it's not the most, dependable Fib level. So, again, 38.2, 61.8 are the levels. Definitely we'll get into the chart and I'll show you. But also, you can take some trades based off the 78.6, the 88.6, and the 100%. So, the 100% Fib level. So, these are less probable, but, reversals do happen from these areas. This is just a deep pullback, a deep retracement. And from here, you just want to, if you are taking a trade off of one of these three levels down here, because they just are, okay, not the most, high probability setups coming off these levels, you just want to wait for extra confirmations. So a nice transition, more confirmations, more, MA crosses, something that's going to support a continuation. You're not just going to take a trade based on your first, bullish engulfing off of one of these levels. You just want to make sure that there's enough confirmation there. And sometimes these levels do work out. Okay. But right now we're just going to focus on the 38.2 and the 61.8. So let's jump over to a chart and kind of just, dissect it, what it looks like. So this is a monthly chart. Fibs work on all time frames. I'm just on the monthly just to keep things clean and pretty simple. Okay, so what we're going to do here is Fib. It's a bearish trend here. We can see, right? This was the low here. It broke support, broke through support, tested as resistance. So we're looking to continue with the overall bearish trend. So what we want to do here is we want to Fib from, I'm sorry, hold on, where is it? There it is. We want to Fib from the high to the low in a bearish scenario, right? So we're fibbing to the low here, this high, this bearish wick, which is the first conviction candle of this last lower high before the break. And then we're fibbing to the low of the last bearish wick. So we're looking for a sort of pullback here. You can see that it came back to the 50% and then pushed lower. I know we just said that the 50% is so-so. Sometimes it's hit or miss. In this scenario, it played back to the 50% and it actually, rejected pretty well. It reversed pretty well. But there's also a lot going on here. So you're looking for those extra confirmations, like I was saying. This area is the big area of confluence. So there's key resistance here. It was support, broke through, came back. So there's a lot of things, a lot of factors coming into play here that support this continuation. So the resistance level, the 50% Fib level, and then it dropped. Okay, so this is pretty classic, break, retest, and then we're looking for an entry in here. So I'm actually going to go to the daily time frame. I'll show you guys where an entry would potentially be and how you can use Fibs. So this is that retracement here, right? Zoom in. So essentially, once you see price action reaches one of these Fib levels that we are looking to trade, so 38.2, 61.8, sometimes the 50%, and then the 78.6, 88.6, and 100%. So right now we're at the 50%. So how do you trade this? So we see that price action came to the 50% in key resistance. I'm going to highlight this because this is a bit of a rectangle pattern, right about here. So you want to see a break of this. That's the only way we can confirm that this is a true reversal. And that break happened right over here. Let me go ahead and highlight this just like that. So you can see clear break of this pattern. It's now going to the downside. We had a lower high here, pushed lower, broke outside of this rectangle, did a quick retest, and then engulfed. So your entry would have been on this exact candle right here. Actually, either of these candles, these two large bearish candles, either of those could have been an entry. And that's basically how you would trade fibs in a simple level, right? Stop loss would be outside that. Granted, this is a higher time frame, so you're not taking trades based on the daily time frame. This is just for educational purposes. So again, you can use fibs on any time frame. This sort of transition can happen on any time frame. I'm sure there's 1 hour entries outside this lower high here where you would put your stop loss. It'd be something like this. But for right now, again, we're just marking it up for educational purposes. So this would be your entry. Stop loss would be outside this lower high, and then you would target lower, at least 2 to 1. Right, so it hit 2 to 1 here. Yeah, our target probably would have been in line with this support here. It's a minor level of support, all in here. Okay, so this would have been our target, and you could see it hit it. It's 2 to 1 risk reward. Great, it's exactly what we want to see. But yeah, that's just a very basic breakdown of how to use fibs. We are actually going to drop down timeframes here and fib more recent price action, so I could show you how you can apply it in a modern or a current market rather. So this is a huge push here. We're on a daily time frame, so I'm going to go ahead and fib from this conviction candle. This is where it broke. So let's go ahead and highlight this. I'll show you and why we're fibbing it. So this is another little rectangle pattern here. We got a higher low and then price action broke out. So on that breakout candle is where I'm measuring from. The wick of that bullish candle to the high, which was this high right here first. Pulled back. Here's the 38.2. It hit the 38.2 and then continued. Right here. Okay. So 38.2, right? It hit it. Now it's pushing back up. And your entry would have been somewhere in here. So I'm going to go ahead and drop time frames and highlight the exact entry. So let's go to the 4 hour. Okay, here's the 4 hour. Now we're looking for this break. Okay, so what we want to do is pretty much highlight this whole area right here. This was key resistance. I'll explain in a second. Okay, so see how it pushed up, pulled back to the 38.2, was going sideways. This is pretty much just consolidating. There's a lot of ranging happening here. Let's go ahead and adjust this a little bit. Just like that. Boom. Okay, so there's a lot of ranging here. Every time I hit this level, it rejected once, twice. Every time I hit this 38.2 zone, it rejected, right? Same again here. It hit it again, rejected. Hit it again here, rejected. Now, these are higher lows, so this is hinting at a break to the upside. So let's go ahead and just draw a quick trend line in here. Yeah, roughly something like that. Doesn't have to be exact, but what we're looking for is a break of this and a retest. So this right here broke through resistance, came back, tested a support, gave us a nice bullish engulfing. That's your entry right here. This is your entry right here. And this is all, this all comes from using fibs, guys. So it's very methodical, right? So we see a push happen. We see a nice bullish push happen, right? It establishes a high. Now we wait for structure. Structure formed. Now we wait for some sort of conviction, right? Some sort of confirmed level that this is a higher low at structure. And essentially we just want to see that this is confirmed structure. And that happened after it broke out in, hinting at a continuation. It broke out of this resistance, tested, and then that's your entry there. And then your stop loss would look something like this. Or the whole position would look something like this. Your stop loss would be outside this higher low, somewhere around 60 pips. And then we would just target higher, fib levels, being the 61.8, or, even higher towards key resistance, which was all the way up here, right around 1800. Okay, so that would have been our target. Great freaking trade, literally no drawdown here. That little wick maybe, a couple pips, but honestly, this is like one of the greatest, setups. Classic break and retest. 6.3 risk reward, risking 60 pips to get 380. This trade would have played out perfectly. And it's on the 4 hour time frame, so it would have taken about 11 days to play out. So this is more of a swing trade, but again, 6 to 1. If you're risking 1%, you're getting 6.3% in 2 weeks, which is phenomenal. Okay, great trade there. So yeah, just a quick breakdown of fibs, guys. This is a really clean setup. Go apply this on your own chart. Just draw the fibs in both bearish and bullish scenarios, and yeah, see if you could find some trade setups like this. All right, guys. So this has been another Forex League market lesson video on Fibonacci, and I'll see you guys in the next one.